there are certain regime shifts where, suddenly, like we saw in 2018, that the small and mid cap that were growing at a very rapid pace suddenly stopped working, right? Similarly, if you look at the past couple of years, momentum stocks have done much better than high quality stocks, right? So how do you manage to hold on to your high conviction stocks when something like that happens, when something like a switch happens in the market where, if you might have chosen a high quality company, it is being outperformed by a high momentum play? How do you manage to hold on to your winners then?
For us, like you rightly said, just in the last 4 years, you're already talking about three shifts. You're talking about small and mid cap, you're talking about growth, you're talking about momentum, you're talking about anti quality. So, I mean, this keeps changing. So, it's important for a fund manager to be true to their process, right, and not deviate based on narratives. But end of the day, the equity markets at a certain level functions on narratives, right? So as a fund manager, it's your fiduciary responsibility to blend narratives with numbers and establish that the story and the narrative along with the data establishes what you do, and that's what builds your conviction. So for us, our conviction from a numbers perspective, I'll give you three metrics that matter to us, right? Very simple metrics. One is your gross profit margin of a business. Second is the pricing power of a business. And third is the market share growth, right? I cannot tell you that all three contract, but I have a great long-term business, right? The narrative and the numbers don't match. So, for example, in the last 2 quarters, you've seen logistics getting disrupted, supply chain getting disrupted, ports having issues managing raw material ships, as a result of which metal prices going up. So, how many of the companies really have managed to even maintain their gross profit margin, let alone increase? How many of the companies have actually managed to increase their pricing of the products that they manufacture? It tells you a lot about these are the kind of companies that can not just maintain but also grow their market share. Right? What the market does in terms of punishing them or the business is dropping 20%, that's not under your control. But when you have these trends being actually maintained during difficult environments, then you know that your conviction is getting maintained. Right? And the last part, I always keep harping on this because when you have cash flows, you can either pay it in the form of dividends or buyback or reinvest it. And the investors in general don't like reinvestment into fixed assets. Why? Because it depresses earnings. As investors, we love it, right? Because end of the day, when the demand cycle is robust, that's what a company is meant to do, right? So when you get this combination, both from a narrative as well as a story, as well as backed by the actual data that we see on the ground as analysts, that's what builds our conviction, be it during bull or bear markets.